Welcome, welcome, welcome. We are glad to have you here. I know we've got 1 minute before we officially begin, but I heard the music starting to come to an end. So hope that we were able to set the tone and the energy for this 20-minute training. I wanted to jump right in. And so I'll give this last 10, 15 seconds for people to join. If you want to drop in the chat where you are joining us from so that we know where you are in the world, that will be wonderful. And so this is the AIB 20-minute training. We started them in February of this year, and every month we've been able to bring a variety of different topics that are pertinent to entrepreneurs, to small business owners, to people that are trying to improve their business practices, and also have really good work-life balance. And so as an entrepreneur, I chose topics that were really important to me and things that I needed to know more about, and decided to bring them in a very quick and informative way so that it doesn't take up all of your day, but introduces you to experts on a variety of topics that you can then dive in deeper with. And so we've done everything from virtual events to how to manage relationships, especially in business, because relationships are a huge part of how we do business. And so not avoiding conflict, but being able to dive into having good, healthy relationships. We've also covered transitions, a number of different topics, and I am excited about the topic today. If you asked me last year, I would not have been excited. But this year, with the things that I've learned and been able to put into place with these two wonderful guests that I have, 2021 has actually been really amazing and better than I anticipated. And so I wanted to end this year on a note that can kind of be a little challenging for many, and something that is intimidating for some as well, to have a business, to be in business and be profitable, but not understand the numbers is something that a lot of people face. And so I wanted to be transparent and share that I've been in business for 20 years. This was our 20-year anniversary. And this is honestly the first year that I felt like I really understood how my business was operating financially and what things I needed to do as the business owner to improve. And so today I'm not going to spend a whole lot of time with introductions. I am going to say happy holidays to everybody. So some may celebrate, others may not. But this also ties into our topic of finances, because this is a time when a lot of people can get into trouble. And so the things that we're going to chat about today are really helpful for business, but also some practices that can help you in your personal life as well. And so I am going to quickly read the bios of our two guests. And one of them I know really, really well, but just as common practice, I'm going to read it anyway. So I'm going to start with Kimberly Wolfe of KAW Solutions. I had the pleasure of meeting Kim earlier this year, and I knew that she would be able to help me with some of the bookkeeping and some of the things that I needed to be more fiscally sound with my company. And so Kim has been empowering business owners for the past 17 years by providing them with timely, accurate financial statements. She's passionate about not just delivering a service, but in teaching her clients how to best use their data, and in teaching others how to create and run their own bookkeeping business. And I will add to that that Kim has an extremely calm and what will I say? It's a demeanor that helps me to not feel as bad about the things that I'm doing wrong, but that really does focus on the things that I'm doing right and how to continue moving in that direction. So I appreciate that, Kim. And
Absolutely.
then our other guest is Hazel Moss, who's a recently retired CFO of a nonprofit organization. She served in the financial arena for over 50 years. She continues to provide financial and tax support to small businesses and individuals. She has a passion for helping others, especially youth, manage and understand the impact of managing their finances. She also happens to be my mom. And so the team of Hazel Moss and Kim Wolfe have gotten me in wonderful shape. I am excited about 2022 and about being able to learn and do more, but I wanted them to be able to share their wisdom with you all today. So welcome, Kim and Hazel.
Thank you, Aisha.
And so we're going to dive right in because 20 minutes goes by really fast. We'll just let everybody know that if you have questions, drop them in the chat because that's how we'll be able to gather the questions and answers. But Kim is going to share some things that are really important for us to know, and then we'll be able to dive into the Q&A right after that. So take it away, Kim.
That sounds great, Aisha. I love that introduction. That was fabulous. And I'm so excited to be here because I love to teach this topic. When you've been doing something for as long as I have, for 17 years, you see the same things over and over and over again. And you realize that everybody has the same pain points. So it's really fabulous just to try to educate. And Aisha, like you said, like I don't consider myself having a calm demeanor. My husband probably wouldn't agree with you too much. But you know, when you can help somebody in that way and just help them feel like it's okay, it's so rewarding. So I'm really glad to be here to present this topic today. So Joy, if you want to go ahead and start the presentation there, I'm hoping to have, if you have a visual, I'm hoping that it'll just kind of help solidify these concepts a little bit more. So go ahead and go to the first page here. What we want to talk about today is, as we get to the end of the year, we see the same things over and over again, where people are in a bucket where they say, oh, another year, my finances are a mess. I told myself I wasn't going to be in this position again this year, and here I am. And so we get a lot of incoming clients this time of year. And again, we see the same things over and over again. And we see that there really is, across the board, very little understanding of the business owners with their finances. So hopefully at the end of these 20 minutes, you guys have a much better understanding of the high level of your financials and what you might be looking for. And some of you are going to be in different buckets. Some of you are trying to do this yourself. So it's going to be really helpful to you to take away some nuggets that I'm going to present today. And then some of you do have somebody who's taking care of your financials for you. And in that case, it's really, really good for you to be able to know what to look for when the financials are presented to you, so that you can make sure that they're being done accurately. And I can say that there's a pain point in our industry where they're not always done accurately. So I definitely want you to have some knowledge here and how you can tell. Now, there's lots of different financial statements we can look at, but it really boils down to two. And I would say all the others are kind of supporting information. So the first two financial statements that you need to become familiar with is your income statement. And everybody loves that one because it's the one that tells you what your income is. Subtract out your expenses. You look at the bottom. That's what everyone wants to look at. How much money did I make this year? Or how much money did I make last month? Or how much am I making so far this month? So that's the one that everybody wants to look at, the income statement, also known as the profit and loss. But there's another report called the balance sheet, and I don't take a look at the income statement until I've looked at the balance sheet, because it's very important for your balance sheet to be accurate before you can look at your income statement. So let's dive, again, quick 20 minutes here. Let's dive just a little bit into each of these statements. So the income statement really has two different accounts in it. It's got your income accounts and it has your expense accounts. And you're gonna know at the end of this presentation, there's really what I would consider 5 different types of accounts that your money lands in. When you spend something, it typically lands in an expense account. When your client pays you or your customer pays you, it ends up in an income account. And then everything else ends up on your balance sheet. And we'll talk about what those 3 different types of accounts look like. But on your income statement, there's just 2 accounts that we're looking at. And everybody can understand those pretty well. They know what their income is, and they typically know what their expenses are, even though there's some common errors there. Sometimes we end up with some items being expensed, which really should be assets. But these are your 2 basic accounts here that end up on your income statement. And this is the one everybody likes to look at. And then on the next page, let's take a look at what's on your balance sheet. So on your balance sheet, we have the other three types of accounts that your money lands in. We have your assets, we have your liabilities, and we have your equity. The assets are like major purchases that you buy, like maybe you're a car. A car is an asset. Your liabilities could be credit card liability. In fact, let's go ahead and go to the next slide because I've given you some examples here on the next slide. So here I've given some really typical examples of what you may spend your money on. For example, for the assets, your cash accounts are your assets. So that starts with your bank accounts, maybe savings account. And then you have your furniture and fixtures. Those would be major purchases, equipment, computers and equipment. So when you buy those things, you have to make sure that they don't end up on your income statement. They have to land on your balance sheet and become an asset, not just an expense. Then you've got your accounts receivable. That's a special type of asset. And then I put et cetera there because there's a couple more, but I knew in 20 minutes I couldn't get into all the different examples. And then on the liability side, here's some examples for some liabilities. We've got credit card liability. We've got maybe payroll liabilities for those of us running payroll. Maybe some loans. It could be a car loan, could be just a line of credit, something like that. A common mistake is for those to end up on the income statement and expensing the loan payment instead of reducing a liability. Your accounts payable would be an example of a liability account. And then there's a few others that we won't get into. I just wanted to show you the main ones that people are most familiar with. And then the equity, I think most people really understand the income statement, the income, the expenses. Then we move over to the balance sheet. Okay, we've got assets, we have liabilities. I get that. Now equity, everybody kind of scratches their head and says, what in the world is equity? Well, equity really is three main types. It's money that you put into the business, it's money that you take out of the business, and then it's your rolling profits. And that's kind of where people start to scratch their head. But that's called retained earnings. And that is, just something that rolls forward as your business progresses year to year. So now you're familiar with the different types of accounting accounts that are used in your financial statements. And in a second here, we're going to look at an example income statement and an example profit and loss. And I always tell, like I teach students how to create their own bookkeeping businesses. And one of the things I like to teach my students is really, as long as you can figure out if money gets spent, it's going to get spent in one of those 5 buckets, or it's going to come in one of these 5 buckets, either income, expense, asset, liability, or equity. And as long as you make sure that things are falling in the right bucket, then you're going to have a clean set of financial statements. So let's go to the next slide and take a look at what an example income statement looks like. Again, this is the one everybody likes to look at. So let's start at the top here. I just pulled this as an example. It's just an example QuickBooks file. So let's hope that your sales maybe from the period of January to November is a little bit higher than $230. But as an example, that's what we have here. So right at the top of our income statement, we have our income. And then we start showing the expenses. And we can manipulate this report and put them in whatever categories we like, whatever makes sense to us. Again, as long as an expense is an expense and income is income, asset is asset, as long as they're ending up in the right buckets, we can manipulate this report to make it favorable to how we like to look at the data. So in this example, we've got some contractors, payments through ADP. We've got some interest that get paid. We've got some payroll taxes here. And then we've got a bucket here for other type of income. I like to put our sales tax discount, which you receive here. It's not really due to normal operating income. It's just a discount that you get when you pay your sales tax on time. And at the bottom, that's the number everyone wants to look at. Probably not this business owner because we're showing a negative 25,000 here. Again, just an example though, to show you what this income statement looks like. And then let's go ahead and go over to the balance sheet, which is a little bit more head scratching for most people. They don't know what they're looking at when they look at the balance sheet, but look at what it starts with. It starts with your assets. And then you've got your bank accounts that we talked about. You've got your accounts receivables. That's an asset. It's money that people owe you. We've got some fixed assets, so our machinery, and then some vehicle assets. And if we go to the next page, we'll see the liabilities portion. So here's our liabilities portion. So at the top, we have our assets. At the bottom, we have our liabilities and our equity. So we have our credit cards. Here we've got some payables for some sales tax. We have some money that's owed to a different company that in this example, the owner owns. We've got some long-term liabilities. It looks like we've got a liability to Bank of America. But as the business owner, this here shows a really good example of some things that I want you to look for. For example, look at the top of this. We're showing a credit card liability of negative 21,000. Like, oh, that can't be right. Why would I have a negative credit card liability? So that kind of thing should alert you that maybe there's a problem with my books. Maybe something's not quite right here. And in this case, probably what's happened is we've posted all of the payments to the credit card, but we haven't yet captured the expenses. And the implication of that is that, oh, this poor business owner, instead of having negative $25,000 in income, it's probably like negative, add another 21 to that. So maybe $50,000 in income because we haven't captured all the expenses yet. So you have to be keen in being able to look at these statements. Here's another negative for the Ford loan. Why would the Ford loan be negative $800? Mm-hmm. So that's another area that you would want to look at and identify, oh, there's probably a problem here. And if somebody else is doing your books for you, you can ask the question, well, this doesn't look right to me. Why is this number negative? And then go ahead and go to the next page. So what I wanted to give you, and we won't have time to go over it in the 20 minutes that we have, but I recently did a blog on some 10 most common bookkeeping mistakes that we see. And again, we see them over and over and over again. And as long as you can mitigate those mistakes, this blog goes over, these are the 10 most common mistakes and how to avoid them. And then there's also what would be great for business owners is I've got a document that shows like a 20-step process that you can go through of things that you can check on your financial statements and make sure that your financial statements are accurate. So your data is only as good as the input, what you put into it, right? And you have to have a way to check and make sure that you're avoiding these common errors and making sure that your financial statements are accurate. So I think that probably puts us pretty close to the end of the 20 minutes. And if not, then I can go over some of the common bookkeeping mistakes. And I think Hazel's got some nuggets for us in terms of some things that you can do maybe to reduce your tax liabilities at the end of the year, and some things that right now, as we're approaching just the last few days of the year, some things that you can look at going into the new year.
Yes, I do. But I want to piggyback on what Kim was saying about your income statements, because I typically see individuals look at their income statements and they feel good about how much money they have made, but then they say, well, my bank account doesn't reflect that. And that's because they're drawing money out of their account to pay themselves as such as a withdrawal, which is not reflected on the income statement. So if your balance on your income statement may be a positive 25,000, but you've drawn out 25,000, then your income is not zero, it's still 25,000, and that's what you're paying taxes on. So I want people to realize you're not paying taxes on your bank balance. You're paying taxes based on your income statement. Now, there are some things that are different between your income statement and your taxes. And most small businesses file taxes on a Schedule C, unless they're a partnership, then they may get a K1. But if they're filing on a Schedule C, such as some of the assets that Kim talked about on the balance sheet, if you buy a computer, well, for tax purposes, you may be able to expense that computer. So you will be able to reduce your taxable income. So instead of your taxable income being 25 or 50,000, if you bought a computer for 2,500, you can take that whole amount as an expense. So there are some reconciliations between your income statement, balance sheet, and your tax return. The other thing I want to let people know is please make sure you pay estimated taxes during the year, quarterly estimated taxes, so that at the end of the year or when your tax preparer do your taxes, you're not blindsided to say, why do I owe all this money? Well, as a self-employed person, you're not only just paying your income tax liability, you're also paying Social Security and FICA, and you're paying both your share and what an employer would pay for you, because you are your employee and employer. So you're paying double. So make sure you get with your tax preparer to do some tax planning. And the other tip is, if you're planning to buy some major items, or you owe some people that you have to pay for services that they rendered, if your income is high now that you're projecting your income to be kind of high, I would pay those expenses in the next few days so that they're deducted from your income for filing your taxes for 2021. If not, just delay some of them. If you're showing that you're close to a loss, or possibly by the time you add in some of these expenses that are on your balance sheet and you have a loss, delay paying those expenses or buying that equipment till next year. So you need to do in the next couple of days some fast numbers, as some people may say, the back of the envelope numbers, if you don't have financial statements, just to project where you think you may be and to make sound financial decisions within the next day or two that may help mitigate some of the tax liabilities you would owe. So if we have any questions, we can address those now. We have I don't know if we have a few minutes or not.
We do have a few minutes. And so the way that we schedule the 20-minute training, first, thank you very much, Kim and Mom. I can't call you Hazel. Kim and Mom, for giving us that information. It took me a minute to even understand the things that Kim is mentioning. So if there are some things that she said that you don't understand, do not feel bad. I am going to share that at the beginning of this year, when we first started talking, especially the assets and liabilities portion, when they talked to me about my financial statements, it did not click. It wasn't something that made sense to me. Like you said, the income statement and income and expenses I had heard for so long, I understood that, and that made sense. But it took a couple of times of us walking through and talking about the specific examples of my business and where things fit for me to understand. And I will say that one of the biggest things that can hinder you from improvement is being ashamed or feeling like you should know things that you shouldn't. They've been doing this for years, so they would be on Zoom with me talking a whole nother language. I'm learning it, but I just encourage you, if there are things that you've heard today that you don't understand, to reach out, to send an email to Kim, because she is very patient and will be able to help you to understand your business and your business needs. And so if you do have questions, feel free to drop them in the chat. The way that we schedule this is 20 minutes of learning so that you can get the information and so that you can kind of get a sense of what you may need to know, and then the additional 10 minutes of Q&A. And no question is bad or is it's probably helpful to you and someone else if you ask the question. So we do have a question in the chat that says, why do I pay so much taxes if I'm single and I have no kids? I always owe. And so I don't know if either of you want to take that. And this is from Mika.
Well, it depends on how your income is generated. If your income is generated from from you being employed, the question is, are you having enough taxes taken out when your employer is paying you? So you need to look at whether you are claiming single, one, because I have clients who have been married and their spouse may have transitioned or they divorced and they never changed their status with their employer. So you need to make sure if you're single that your employer is taking out enough taxes. If you are self-employed, then you should be paying quarterly taxes. Because you're single and no kids does not mean you don't make money. So you may be still making money as a self-employed person. And so when you get those 1099s from, people that you have done contract with, as Kim was saying, you need to look at your income statement and see how that fits into your tax return. Because if you're filing a personal tax return and a Schedule C, as I mentioned before, you are paying the Social Security and FICA taxes that your employer would deduct, as well as the share that would come out of your paycheck. So it's basically double. So you need to look at it, be proactive about it, and do estimated taxes if you have self-employed income.
And I know that there may be some people that have both. So if you want to share, just if there's anything that they may want to look out for, if they have an employer and they have a business that they're doing on their own, then there's some implications, right, from how you set up with your employer and the income that you make.
I would look at them as two separate situations. Don't look at them as combined until you file a few tax returns and see how they fit into each other. Because typically you may say, oh, I'm having taxes taken out from my employer. I don't need to pay any other taxes. That's not true. So I think you need to look at both. And Joy, I didn't give you my email address, but you can drop that in the chat. If people have questions for me, I will respond as well.
Fantastic.
And I do taxes. So, I acquiesce to Kim to do all the QuickBooks and the bookkeeping and all that. And then she sends me the file and I do the taxes.
So if you have some tax questions,
approach.
And a wonderful team. So if you have questions specifically about taxes, you could send those to Hazel. If you have questions about bookkeeping, which I do see one, so I am going to ask that question. Marla wants to know, what should she do to prep QuickBooks for taxes and ongoing accounting needs? And I'm going to ask you, Kim, if you can also just share your insight about QuickBooks versus QuickBooks Online, because I was very pleased with the options that were provided by QuickBooks Online. So just if you can give a little insight there.
Sure. Yeah. So I'll start with Marla's question. Thank you for the question, Marla. And really, it all starts with the chart of accounts in QuickBooks. So the chart of accounts is where you're going to label. These are what I want to call my income accounts. Maybe you have 3 or 4 different buckets that you want to put your income in. And in QuickBooks, you're going to use that chart of accounts to label those 3 or 4 different types of income accounts. And that's the part you want to make sure that you get right. So again, your income is income, your expense is expense, your assets are assets. And you can design that chart of accounts to suit you and what makes sense to you. Some people like a lot of detail, some people like a little bit of detail. My rule of thumb is I don't want my financial reports to be, I really like a page, because more than that, you get kind of bogged down. You look at it and you don't want to look at it because it's too much information. Mm-hmm. So try to keep that in mind. And so have the detail that you need, but not too much. And then the bottom line is those financial statements are going to show you, for example, your income statement will show you your net profit. That net profit is going to loosely translate to your taxable income. Mm-hmm. However, when we take our books and hand them over to Hazel, Hazel's got some things that she does on her end, like, for example, calculate the depreciation, or maybe there's something that I think it's called a 179 expense, something that you can expense that you may not otherwise would have been an asset. Right. So Hazel's going to make her adjustments, and your taxable income is going to be massaged and adjusted a little bit from what we present. Mm-hmm. But it's our intent that your books are set up so that you can make good business decisions. We want you to have a set of financial reports that you can use to make decisions for your business, not just file a tax return and not just present to a banker to get a loan. So hopefully that's helpful to you. And then Aisha, your question on QuickBooks Online versus QuickBooks Desktop, I have to say I'm old school. I started this 17 years ago before there was a QuickBooks Online. I still prefer the desktop for lots of reasons. You can work in it faster. It's got much better reporting. However, it's not as versatile, right? Everybody wants these online cloud tools. And I will say QuickBooks Online has gotten so much better, even just in the last, probably even less than 5 years. They've really improved the software a lot. And I'm almost starting to prefer QuickBooks Online, but not really. But most of my business is a majority probably now QuickBooks Online. I think we have more QuickBooks Online customers than we do desktop. And Intuit is trying really hard to phase out the QuickBooks Desktop. So we all have to embrace the QuickBooks Online. And a lot of people do love it. And I'm loving it more and more all the time. So it definitely has some advantages. Probably the thing I dislike the most is you have to wait for a transaction to save. You can't quite work as quickly as you can in the desktop. But does that help?
Well, let me piggyback onto that, because on the other side, I don't work in it like Kim does, but what I find is we all work at different times of the day or night or different pace. And so I don't have to go to a client and say, can you send me this? Or can we share the screen and look at this? If I'm up at midnight or 12 o'clock and I want to look at your account, it's so much easier to look at where you are online, pose my questions to you, and then you answer them based on your availability. That's one of the benefits I see of QuickBooks Online versus the desktop version. But if you don't have either and your finances are limited, do something. So if you do the QuickBooks, desktop to start with, because of, the economics of it, so that you can follow through, you may not have as much hand holding, so you may have to do a bit more of it yourself, but at least you have something for Kim or myself to work with and to guide you through, because the Excel spreadsheets don't work no more.
And I've tried them for years, so I will agree that they do not provide as much insight as you need,
Right.
especially once you get to a certain level of being able to have multiple income sources. You
Right.
really want to be able to have those details to provide accurate information. And so I warned everybody that 20 minutes goes by really fast. I know that this is a topic that requires a bit more insight and information. I just wanted to introduce you all to Kim and Hazel and to get started and not feel intimidated. Thank you, Steve, for letting us know that was not Marla, but as Zoom does, sometimes Joy is Aisha and our names don't always line up. So Steve, feel free to send emails to Kim and Hazel with specific questions that you have. And if there are other opportunities that they have as far as workshops or information, Kim said to just email her. She'll be able to share some PDFs with you. We're all about sharing information and making sure that we are doing better in 2022. And so I thank you all for your time. I thank you for your questions. We will be sending this video to everyone, as well as some summary information and their email addresses. So if you were driving or on a phone, don't worry about stopping. We will send it to you so that you'll have it. Have a wonderful rest of this year, and we look forward to seeing you in 2022. Thank you.
Thank you.
Thank you.